Welcome to the January 7th edition of the LiveTraders Swing and Wealth Building Newsletter. Hi guys, Jared Wesley here of LiveTraders, and welcome back for another edition of the LiveTraders Swing and Wealth Building Newsletter, the first one of 2019. We have a lot to talk about today. The world seems to be flipped upside down the last several months, and a lot of volatility in the marketplace, and there's a lot of concern out there. There's a lot of people that are scared out there. There's a lot of fear in the market, and every day it seems like the market's either up 500 points or down 500 points. In fact, last week we had a 1,000-point up day in the Dow. As a point value, the highest, biggest day in the history of the market. I mean, last week we had a 700-point up day, and we had a 500-point down day. I mean, people are really scared out there, especially the average person, but have no fear because LiveTraders is here, okay? So guys, one of the big things that we're gonna be doing in this newsletter, and this is a weekly newsletter, okay, is we're gonna be talking about swing trading, sometimes a little bit of core trading, occasionally the odd day trade, but it's primarily focused on swing trading. But we're also going to be focusing on wealth building. What do you do with this money once you've earned it, particularly through swing trading or intraday trading or anything else that you're doing in life? So not only will this help you become a better trader, but this will also help you manage your money better so that you can have nice things, and you can have cars like that, and you can have boats like this, and you can live a very nice lifestyle. But more importantly than having the money, guys, it's all about having the freedom. So you can, you know what? You can kind of flip that finger to your boss when you don't want to go to work anymore. I get so many calls and emails every day and every week about, Jared, show me how to trade, show me how to invest, show me how to build wealth. I said, why are you so interested in that? And they tell me, you know why? Because I'm tired of my job. I'm tired of my boss. I'm tired of being told where to be and when to be there and when to show up and when I can leave. I just want to call my own shots. Well, if that's you, you're in the right spot, okay? So let's get started and let's take a look at the markets. So let's do a quick 2019 market outlook, guys. I'm going to do a YouTube video on a broader, more detailed 2019 outlook, but today for the newsletter, I really want to take just an open, broader look at what might happen in 2019. I've already alluded to greater volatility in the markets, but the question is, why would I say that? Why greater volatility in the markets? Well, let's take a look at just a couple things briefly here, okay? One, we're in the middle of a government shutdown in which both sides are blaming the other side, which is typical in that respect, and there doesn't seem to be an end in sight. Now, we all know that this isn't going to last that much longer. Even if it's 2 or 3 weeks, we're not likely to get into February with a government shutdown. Is it possible? Yes, it is. But during this shutdown, there's going to be a lot of volatility because of the extended fear. But even more important than a government shutdown, guys, is the Federal Reserve Chief Powell saying, hey, you know what? We're going to raise rates likely two times in 2019. Well, when he came out and said that in late December, the markets absolutely tanked. And it's not that they raised rates, it's the forward outlook that scared everybody. Well, thankfully, as you can see on the screen, here recently, a couple days ago, he came out and said, look, I understand your concerns, everybody. I am listening, okay? I'm not blind to what's going on in the markets and what's going on in the world geopolitically as well as in the United States. Now, what effect did that have? Well, right after he said that, the markets took off. Okay, now that didn't necessarily change the broader volatility, because the next time he comes out and says something and says, you know what, we have to raise interest rates, okay? Keep inflation in check and slow the economy down or speed the economy up, depending on what their goal is, the market could tank again. But those types of back and forth things are also going to intensify and create more volatility. So right now, this week, and perhaps next week, the week after, well, the market liked what the Fed chairman had to say, but that could change next month or 2 months from now. Now, in a few more weeks, we're also coming into earnings season. All right, the end of January, early February, really kick into full gear, high gear for earnings season. Well, What just happened with the largest company in the world, most profitable company in the world? Tim Cook, the Apple CEO, came out and said, you know, guys, iPhone sales are not so good. And we've been raising prices, but it hasn't been offsetting. So expect 8 or 9 billion less in revenue coming up. Guys, that is massive. Massive, massive. This is a company that's used to making 40 or 50 billion dollars a year. So that's a very big deal, 10, 20% pullback, okay? And the stock has shown it from the all-time high. I think Apple has lost almost 40% of its value, perhaps even more. On top of Apple coming out with this news, we saw last week, a couple weeks ago, the FedEx chairman coming out and saying, gosh, you know, the geopolitical events around the world, the trade war with China, the economies in general are weakening up. And guess what? Our business is suffering because of it, okay? And let's go beyond even FedEx. Facebook is still having issues with their privacy policies and the Russia investigation and all the political things surrounding it and people's information being stolen from their websites. Now, why am I mentioning these specific companies? Well, they tend to be pretty damn big companies. Apple, FedEx, Facebook, okay? So if we're seeing, particularly in Apple and FedEx, a pullback in earnings already starting to happen, these things usually don't fix themselves overnight, right? These things usually take years to fix, certainly 2 or 3 quarters to fix. So in the foreseeable future, you have to expect Apple earnings to be slightly disappointing. You have to expect FedEx earnings to be slightly disappointing. Now, unfortunately, I don't want to get into it now, but the irony of the market is that they come out and said, we're going to have probably softer earnings. So what do the analysts do? They lower expectations. So if you meet the lowered expectations, the stock still has an opportunity to pop and go higher. But that's just if we're looking at the fundamental side of things, the earnings per share, the credit risk, sales figures, who's running the company, those things are softening up a little bit. We have to be concerned about that. Again, all of these things, whether it be the government shutdown, whether it be the Fed chief, okay, they're going to raise rates and then saying, no, we understand, and then Apple coming out with softer earnings, and then FedEx likely coming out with softer earnings, and Facebook still dealing with, guys, this is a microcosm of the volatility that we're likely to experience. This is why I'm telling you to expect 2019 to be a very volatile year. Guys, the markets are down almost 20% since their peak in September of 2018. In fact, at the end of the year, December 31st, all of the markets, whether you're looking at the Dow Jones Industrial Average, whether you're looking at the S&P 500, whether you're looking at the NASDAQ, they're all down between 4 and 6% for the year. I think the S&P was the worst at 6.2%. And remember, it wasn't that long ago, October, November, the markets were up double digits, 10 and 15%, okay? And they finished the year down 4, 5, 6%, okay? This is not going to fix itself overnight. It wouldn't surprise me or shock me. It's a little too early to predict January 7th what the market's going to do at the end of the year, okay? But it wouldn't surprise me if we had another red year in the markets. Now, people are going crazy right now. Oh my gosh, the Dow just had the worst year it's ever had in 10 years. Well, think about it, guys. One down year in 10 years is 90% up and 10% down. So don't buy into the fear, okay? I understand there's reason to be cautious, but things are still strong in the economy. Jobs are still good, right? There's a lot of good things. That doesn't mean we're not going to be volatile in 2019. So I wanted to go over some of those things with you guys before we start taking a look at some of the specific charts. And the reason I want to go over them with you is because I want you to understand no matter what you invest in 2019, the first half of the year, definitely, and perhaps the whole year, is going to be choppy. So when you swing trade, you're going to have to really be cautious, okay, when you swing trade. Because market volatility can take a stock that just triggered a nice uptrend or just triggered a nice buy setup, and then boom, 1 or 2 days later, you can have 2 wide range red bars and stop yourself out, okay? And then go right back up. So we're gonna have to be giving our trades a little bit more room, wiggle room, than we normally would. If you have a stop loss that's $2 on a stock, maybe give it $3. Sure, is that gonna cut into your profitability a little bit? Yes. But if you're smart with that, it's also going to save you from stopping out, okay? So when you think about it, maybe lowers the profitability, but it also lessens the chance that you're going to stop out. So it kind of evens itself out, 6 of this, a half dozen of that. So those are the things I want you to be careful about in 2019. And remember, this newsletter will come out every single week, so I'll kind of update my thoughts on that. And also, guys, when I'm done with the charts, stick around, okay? Because I'm going to be going over a little bit of wealth building, all right? I get a lot of emails from folks about how they can't imagine making $1 or $2 or $3 million. They can't imagine retiring with $1 million. Guys, yes, you can. You absolutely can retire with that kind of money, but it takes patience, discipline, and time. Patience, discipline, and time. Patience and time are kind of the same thing, but the discipline is what a lot of people don't have. So I'm going to kind of break down the average salary in America, okay, and break down where your expenses should be going, and then how much of that you can actually save, and at what percentage it will take, and the number of years it will take for you to be a millionaire. And not just a millionaire, a multi-millionaire, $2 and $3 and $4 and $5 million plus. And if you happen to be outside of this income bracket, above that, perhaps you can double or triple the numbers I'm going to refer to in a little bit. Okay, so let's head over to the computer. Let's take a look at some of the stocks that I'm looking at over the next week or two. Remember, swing trading, guys, is usually about 2 days up to about 2 to 3 weeks. Anything past a month is more of a core trade type of an opportunity or an idea, all right? So let's head over to the computer and take a look at 2 or 3 of the ideas that I'm looking at, as well as the levels of the market that you need to be concerned about. Okay, guys, as always, we start with a market review. Why? Because most stocks follow the market, right? Some 70 or 80% of the stocks move with the market. Now, our goal is to find relative strength and relative weakness stocks, okay? However, most stocks still follow the market. So it's always good when you're long-term trading, swing trading, core trading, to be looking at the market levels. So let's start with the SPY, and then we'll get to the Qs. We'll look at them on the 60-minute and the daily minute. Maybe we'll get up to the weekly. But remember, most of the swing trades I'm referring to are usually going to be 2 to 10-day trades, as possibly as long as 2 to 3 weeks. So let's blow the 60-minute SPY up right here, okay? Let's go to the daily chart first. Daily chart first. Now, we've just talked about the volatility that we have seen since September and October. The markets peaked up here in October, all right? And the peak was 293.94 on the SPY. Okay, we pulled back, we bounced, we pulled back, we bounced, we put in an equal pivot high, equal pivot low, equal pivot high. So we're not sure where we're going here, okay? And then December happened and boom, the markets got crushed. And the line in the sand that was very, very important for the markets was right here in this 250 to 253 area, okay? Right there, drawing a line on that area, okay? Right there, okay? But we didn't just break that, we significantly broke that area and moved down into the 232, 233 range, okay? Now, what is the market likely going to do this week? Okay, now we just talked about the volatility for 2019, and we talked about Apple and FedEx and Facebook and the Fed chairman, the government shutdown. Oh my goodness, there's a lot going on out there, okay? But this is key, okay? The market right here had a bit of a climactic setup, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red days in a row. It bounced up, and now it's pulling back, okay? Now, one of the things I want to do here, guys, let me change this up real quick, okay? I want to do this. There we go. Hold on 1 second. All right, now, I wanted to put the 200 period moving average on there. So, same chart, just has a 200 period moving average on it now. Now, we pulled back 10 days in a row, and then we bounced up. And then after the bounce, we had higher highs and higher lows. What does this become? A sell setup. And the sell setup triggered, right? So for the people that are very, very bearish on the market, the sell setup triggered right here at 247.46, right there at that level, okay? Right there at that level. It triggers, puts in a red bar. You would be expecting the markets to retest a 233 low. Right? You put in a little pivot, trigger the sell setup, and you're expecting this low to be retested. What happens? The market bounces it. Not only does it gap up up the next day, right? This was last Thursday, and then right here, the green bar is last Friday. Now, not only does it gap up, it gaps up and rips. It takes off and takes out this area right here. I'll draw a line on it right there, okay? 252-ish, right? Now, why is this significant? Simple. Because this is a sell setup that failed. If the market was super, super weak, this sell setup would not likely fail. So, my short term, when I mean short term, I'm talking the next 1 to 2 weeks, my short term bias for the markets is higher. It's higher back to at least 260 and possibly as high as 270. Why? Because we failed the buy setup. I'm sorry, the sell setup. We failed the sell setup. That's a very bullish connotation. We gapped over a red bar. Buyers are stepping up. We broke above the prior pivot high here. Now, this doesn't mean, to be very clear, this doesn't mean we're going to go straight up to 260 or 270 in the next 5-10 days. We could move a little higher and chop, 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 pull back. We could pull back into the 245, 247 range and then go higher. But we should not realistically be going below this 243.67 mark. We might get down under this area of 246, something like that. But in the next 5 to 10 days, we should be seeing the market around 260 to 270. Only time will tell if I'm right about that. Let's take a look at the 60-minute chart. Okay, let's go 60. Boom. Now, this is interesting. So here's the SPY, guys, right? We just talked about the levels, the 260 area, then we talked about the 250 area, and we broke that, bounce, pull back, bounce, and now what do we have? On the 60-minute time frame, right? We have a downtrend line right here, okay? I'll draw the line for you right there, okay? Boom, 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 boom. What did we do? We broke above the downtrend line, pulled back, bounced, pulled back, and bounced. So this is an area of support at 244 the market should be holding in the near term. Now, that doesn't mean we won't necessarily go below it later in a month or so if earnings are really bad and the market tanks because too many stocks are not reporting good earnings. Well, that's a good fundamental reason for the market to pull back. But in terms of the charts, we have nice support at 244, and right there's the resistance at 251, 252, and we just broke and peekabooed above it. Now, it was a very big up day, over 700 points, 746 to be exact on the Dow on Friday. So we might have a pullback on Monday. We might have a choppy market because this was such a big day. But over the coming 5 or 10 trading days, expect us to retest this declining 200. Expect us to retest $260 mark. So you could actually make an argument to swing trade the SPY for the next 3 to 10 days. You could make an argument for that. Right now, the negative is the risk to reward isn't great. If you want to get in at 252 and put your stop at 245, that's a $7 stop. That's not good enough. You're going to have to find a tighter stop loss somewhere perhaps around 250, but there's no great pivot area here. Okay, so I would be cautious. Now, I expect to see the market test 260, maybe 270. Qs? Oh, same picture, right? Same picture, guys. So 150 to 155, room to 160, and possibly room as high as 167. All right, if we take a look at the daily on the Qs, same situation. They gapped over a red bar and broke the prior pivot low. All right, prior pivot low. So that is the market recap for this week. I am expecting a choppy, volatile market, but I'm also expecting higher prices in the market. So you might be able to take a short-term swing trade on the 60-minute SPY or even the 60-minute Qs, okay? So don't be surprised, though, if the volatility or, for example, the government shutdown lasts longer than expected, or if there's some unexpected news about the Fed chairman or something. This could throw all this in, a kink in all of this. Okay, but if the government shutdown ends and the Fed chairman keeps reassuring investors, the market's going to go higher this week, and the charts suggest that it should. All right, so now let's take a look, guys, at a stock I put out there last week because I think it's important. It's L-O-C-O, El Palo Loco, right? This is a fast food Mexican place. For those of you who aren't familiar with it, think Chipotle, think Taco Bell, think something along those lines, okay? Now, last week I went into a little bit of the fundamentals of this company, so I'm not going to do it this week. But what I want to do is go to the weekly chart and then drill down to the daily, okay? Now, you saw some of this last week, so I won't spend as much time on it. But notice this stock is above the declining 200 period moving average. It was in a stage 4 downtrend right here. It broke the trend line over here, consolidated out between $10 and $15 for about 2 years, something like that, give or take, guys. I mean, we're going back to July 16. Now we're in early 19, 2.5 years, okay? Now what happened? It finally broke above this $15 area, okay? Didn't peekaboo, actually broke above it, got up to the $17 range and pulled back where? To an area of support, okay? Then it put in a green bar. So the buy signal on this was right around $15.15. And I told you guys to give it a stop loss under 14. Well, if you haven't already gotten in, there's still an opportunity here to get in. All right, right around the same entry, $15 to $15.50 right there. Put your stop loss under 14. Even if you have to put it at $13.50, give it extra room. I'm going to repeat this. Give it extra room. Why? We're in volatile times, okay? If we're right, El Palo Loco has room back to $30, okay? That extra 50 cents you won't matter if this thing moves $10 or $15. It won't matter. So you're looking to get in between $15 and $15.50. Try to get a stop at $13.50. Try to get about $1.50 stop if you can. Now, the first target area here is not great. It's only about 1 to 1. So I don't think I would take very much off right here. Maybe a quarter, perhaps not even anything. Then I'm going to look for the $20 mark where this little topping tail is, okay, right there, to take about half off. All right, that gives you about a 3 to 1 first target. And then over here, you're looking for the $25 to $30 mark. Now, in fairness, this will likely turn into a little bit more of a swing core trade. This stock will likely take 1 or 2 months to get back to the $20 to $30 mark. Now, I think you can get 17, 18, 19 in 2 or 3 weeks, but be mindful of earnings coming up as well, okay? Now, let's go down to the daily chart. See what we have here, the gap up. We moved above the pivot, above the $15 mark, and we've pulled back. Now, do you see why I've focused so heavily on the 15-minute? Or, I'm sorry, on the weekly chart. Because it had a little bit of a failed buy setup here, a little bit of a failed buy setup here, and a little bit of a failed buy setup here. So by using the weekly time frame, we're giving this much more room, right? We're above the rising moving average on the daily. We're putting in higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is a very good sign. The stock's not done yet. But trade it on the weekly chart. Trust me, give it more room. It's a lower price stock, so it's not going to eat up much of your buying power, okay? And then look for a $20 to $30 price target, $25 to $30 price target. But again, that price target might take 3, 6, 9 months, but you're likely to get a first price target within, say, 2 weeks or so, okay? So that's El Palo Loco, okay? A Mexican fast food place, all right? Now, there's a couple other stocks I'm looking at. ATRA, all right? Hold on, give me 1 second, guys. Okay, so this is a biotherapeutics company. Now, why am I mentioning that this is a biotherapeutics company? Well, I'm mentioning this, guys, because they tend to be very volatile and more challenging to swing trade. So, what do we have here? A stock that broke out of a range and broke above the $20 mark right here. It went boom, right up to $50. I mean, that's a massive move. It's 250%. Pulls back, bounces, pulls back, puts in a new high. Gets a little climactic, pulls back. What are we starting to see here? We went from a stage 1 sideways trend where nobody cares about it, right? Narrow range, light volume. Narrow range, light volume. Those are attributes of a stage 1. Stage 1, guys, is just simply capitulation. It's simply people going, I don't care about this stock. I don't care about this stock. And then boom, some news comes out, a new drug comes out, and this thing rips and takes off, and everybody wants it. It's the hottest thing going. And then it gets a little bit tipsy-topsy. And some people, especially the professionals, start to say, oh my gosh, this thing's overpriced, right? What new products do they have come out? So we priced in the product that pushed this stock up, but what new products are going to come out? We don't know. So they start to get hesitant about wanting to buy this thing up, okay? And then it starts to chop around. This is the stage 3 tug of war is what we call it, right? It's buyers and sellers going back and forth, and the buyer saying it's too expensive, or I'm sorry, the buyer saying I think it goes higher, and the seller saying it's too expensive, and who's going to win? Who's going to win? Who's going to win, right? Who's going to win? Well, it looks to me like we're finally breaking out of the stage 3 sideways choppy trend, and we're moving into a stage 4 downtrend, okay? Now, we pulled back right here, multiple bars, and we held some support at $30. We bounced back up, and then boom, on Thursday, we put in a massive wide range red bar under $30. Now, here's something that's important. This was a relatively smooth move up, which means the pullback should also be relatively smooth. So, wide range bar takes out support. Friday is a massive 700-point up day in the markets, and what does ATRA do? Leaves a topping tail, okay? Leaves a topping tail. So we have almost kind of a minor pivot or a 3-bar play here. So if this stock breaks under $27.85, you have room all the way down to at least $20 and possibly even $15, right? This topping tail might be an area where potentially buyers step up, but more than likely it's got room to $15. Guys, that's a $12 or $13 move. Now, the problem right now is if it triggers on Monday or Tuesday or Wednesday this week, right now your stop loss has to be $31.30 above the topping tail, right? That's where your stop loss has to be. So you're looking at right now, about a $4 stop loss, about a $3.50 stop loss. Well, that's a big stop loss for a $30 stop. A stop loss that, for me personally, is a little bit too big. So this is a scenario, guys, where I would think about $27.85, okay, entering right under this area and perhaps using the $30 mark. What we're hoping to see here is to get one more consolidation day, perhaps from 28 to 30, right? And then on Tuesday or Wednesday of this week, let it trigger at $27.85 and then use $30 stop loss. $2 stop loss, I can live with that. Because if this thing goes $10 or $15, I'm going to get 5, 6, 7 to 1 on my money. And for a 6-day, 5-day trade, that's good money, right? And if you look at this, guys, you're looking at this right here. Wide range bar, okay? Well, you can see it puts in $7 days sometimes. So wide range bar, narrow range bar drop. So I would watch for ATRA in the next 2 or 3 days to break below $27.85 and hopefully get a stop loss around $29 or $30. $31.30 is a little bit wide of a stop loss in terms of risk to reward. $3.50. If you get a $10 move, you're only getting about 3 to 1. That's not great. It's okay. But this should be one of those stocks that after it triggers, it should be a 3 to 5 day winner. Okay? 3 to 5 day winner. So ATRA as well as El Palo Loco, guys, are the two stocks I'm looking at this week coming up. One of them is a shorter term trade like ATRA. Okay? And the other one is a longer trade like LOCO, LOCO, where it might take 1, 2, 3, even as much as 6 to 9 months. In fact, if things go well in LOCO, you could have it for a year or two. And that's okay. As long as it's doing what you want it to do, take a little bit off, add a little back, take a little bit off, as long as it keeps that uptrend going. And the same with ATRA, but this is a much more volatile stock, and it's likely to hit those targets much, much quicker. Okay? Now, we've seen some other stocks out there. A lot of people are talking, for example, about CRON, C-R-O-N, as a possible swing trade. Well, in my opinion, guys, I'm staying away from some of the marijuana stocks. Okay, I just want this to be clear, whether it's Tilray, whether it's Cron, whether it's Can, whether it's IMLFF. I mean, there's a ton of them, guys. APHA, CGC, etc. Canopy Growth. There's a lot of them. Right now, for me, this sector is very volatile, and there's a lot of question marks. Now, I'm not knocking or dogging on people that are trading marijuana stocks. Okay, I know some folks that have made significant amounts of money last year in these stocks, and that's good. I'm happy for those folks. But you can see the charts. For me, this is not a chart that I will be trading. See how volatile it is. It rips up from $2 all the way up to 12, pulls all the way back to 4 or 5, back up to 10, and back down to 5, and then back up to 7 or 15. So for me, guys, you got to remember, I don't trade like most people do. I don't trade penny stocks. I don't claim to turn $500 into $300,000. All those bullshit charlatan stuff. We don't do that here at LiveTraders, especially in the swing trading and wealth building newsletter, okay? Now, why? Because we're trying to build wealth and we're doing it the safe way, okay? We're certainly not looking for 10% returns. We're looking for 50 and 100 and 200% returns throughout the year, okay? So we're still looking for massive returns, but what we also want is scalability. Okay, so I'm not looking to get into something and blindly buy a super aggressive idea. And sure, could you hit on it? Yeah, you could hit and go make 2,000%. And I'm happy if you do. But the odds of it are very unlikely. And what happens is a lot of people will ride these things all the way back down. They don't have money management rules, right? When we trade, whether it's intraday trading, swing trading, core trading, even investing for me, long-term investing, okay? I have an entry price, a stop price, and a target price, right? An entry price where I buy the stock, a stop loss where I'm going to get out if I'm wrong, and I also have a target area. That's adjustable sometimes, usually higher. I rarely lower my targets, okay? Now, obviously in intraday trading, you're going to have tighter stop losses. 20, 30, 50-cent stop losses are common. In swing trading, $1, $2, $5 stop losses are common. Core trading, $10 and $20 stop losses are common. Heck, on Amazon in a core trade, you might have a $100 or $200 stop loss. Why? I'm going to be holding it for 5 or 10 years. I'm going to be taking dividends from certain stocks, not Amazon, but certain stocks, right? So how you approach the market is different for intraday trading, for swing trading, and core trading. But the one thing that stays constant is entry, stop, target. Entry, stop, target. Money management's your number one job, okay? So I hope that you guys will take a look at Loco, and I hope you'll take a look at ATRA. Now, in these volatile times, guys, I'm going to be putting out fewer ideas. When earnings comes around, expect 5 or 10 ideas on certain weeks. This week, it's just those 2 ideas, okay? Now, stick around, because now I'm going to get into what I consider a very important topic, okay? This is the Swing and Wealth Building newsletter, all right? The Swing and Wealth Building newsletter means we're trying to not only help you become better traders, but we want you guys to become better investors and better with your money in general, okay? There is no excuse in this United States of America, the greatest place on the planet, that you should not retire a millionaire. I'm going to repeat that because I don't want to hear excuses and I don't want to hear victims. There is absolutely no excuse that you should not retire a multi-millionaire. Maybe not multi, but definitely at least $1 million. And remember, $1 million is not what it was in 1960. Okay, this is 2019, 40, 50, 60 years later. Okay, so $1 million is the bare bones minimum. I read an article that said the average American has less than $50,000 saved for retirement at 50 years old. We're going to stop that, okay? You guys have way too much credit card debt. You have way too many car payments. You're living in houses that are probably too big that you can't afford. And on top of all of that, you're buying cars you don't need and all of that. So what I want to do now, guys, is I want to break down certain things for you, okay? And I'm going to do this in real time, okay? So give me 1 second here. All right, I want to pull something up. All right, a couple graphics for you guys. All right, I'm going to use my little notes cheat sheets over here. Okay, The average American family makes about $60,000 a year. Okay, just under, maybe $58,000, $59,000 a year. Okay, now I'm going to put a graphic on the screen that I think is important for you. Now the tax code has changed from 2018 to 2019, and there are some positives in there. For those of you that have children, the tax credit was raised from $1,000 to $2,000. That's positive. Why is that positive? You have 2 kids. That's $2,000 less dollars per year you have to pay in taxes. What can you do with that $2,000? Don't say car payment. Don't say new cell phone. Don't say new clothes or new shopping spree or some other vacation or something. No, I want to hear only one word: investment. What can you do with $2,000? Put it in an ETF. Put it in an IRA, a 401k. All right, put it in the SPY, put it in the Qs, put it in a Vanguard index fund. Okay? And by the way, guys, John Bogle is in very poor health. Jack Bogle, how most people know him. I've had the opportunity of meeting him, and I'm not sure he's going to make it through the next week or two. Okay, so I want to give a shout out to Jack Bogle. You've been an unbelievable human being, and we thank you and we salute you. Why? Because you are the modern mutual fund. You are the modern ETF, and you created that in the 70s with Vanguard, and you didn't even get stupid wealthy off of it. $100 million net worth, you could be worth $10 billion. Why? You wanted to give back. Low cost, 0.1, 0.2%. Those are the types of things, and I'll do another segment on that, perhaps a tribute to Jack Bogle. And I don't know for sure, but I'm thinking in the next couple weeks we may see him pass. Okay, so guys, let's go back to this now. How much does the average American pay in taxes? Well, this is a great picture, or article, I should say, from the Motley Fool. Okay, how much the average American pays in taxes. All right, well, read it. I'll put the link in there. Read this article. Now, let's take a look here, guys. Okay, so average household income, $74,000 if you take it all and you break it down, right? So if you take it, all right, if you break it down, guys, all right, wages and salaries, $57,000, okay? Self-employment income, $6,000. Social Security, $8,000. Interest, dividends, $1,700. Public assistance, $500, etc. All comes down to $74,000. Okay? Now, you can see that. All right? You can see that on your screen. Okay? That's a breakdown. This comes from the Motley Fool, and this also comes from the Bureau of Labor Statistics. Okay? This isn't some BS website. It's the Bureau of Labor Statistics. Now, we have different brackets of people. We have single people. We have married filing jointly. We have head of household. We have married filing separate. So for the sake of argument, I'm going to assume that a lot of you are married. We'll focus on the married filing jointly and single. Okay. So in the 10% bracket, it's basically between $10,000 and $20,000 whether you're single or married. Okay. You're going to pay 10% in taxes. Okay. Now I want to go and just skip up because I don't want this to drag out too long. Okay. Now, the vast majority of Americans, as in about 98% of Americans, okay, are going to be in the 0 to 24% tax bracket, because that goes up to about $315,000, okay, for married filing jointly. That covers about 97 to 98% of Americans, okay. Now, if you happen to be above $300,000 or $400,000 and you're single, God bless you, God love you, you're doing a great job, okay. But if you're not in the 300, 400, 500 range as a single person, and you're married and you're making even $200,000 or $300,000 a year, you fall into this category. Okay, so when you look at this, the vast majority of Americans, okay, the average tax they pay, and this is from the Bureau of Labor Statistics and the IRS, 14%. 14%. Okay, that's what the average American pays. Now, I don't want to focus on the people that have a lot of money right now. Okay, we'll do that at a different time. I want to focus on the people that are in that $50,000, $60,000, $70,000, $80,000 a year mark, because I think that's a lot of you out there. All right. Now, don't get me wrong. This is scalable for folks that are making $1 million a year. This is scalable for people that are making $300,000. This is scalable for people that are making $5 million. But I want to show you guys out there that are making 40, 50, 60, 70, 80, 90 grand a year how you can retire a millionaire. Okay. So, first things first, let's break down a household with a $60,000 income. Let's break it down, okay? So $60,000 times 15% in taxes. It's $15,000. Sorry, I apologize. It's $9,000, all right? So 15% times $60,000 is $9,000. So take $9,000 off of your $60,000 income. You have $51,000 left, right? You have $51,000 left. So if we use a calculator, go 51,000 divided by 12, you have $4,250 in income after taxes. $4,250 per month in income. You're going, Jared, there's no way I can raise a family. I'm gonna say an average family of 4. Now, there are some families that have 7 people and some families that have 1. But I'm just taking an average family of 4. You got 2 kids, you got a spouse. All right? Okay, so $4,250 after taxes. What can we do with this? How can I retire a millionaire on that? Simple. Be smart with your money. So let's break it down. All right? You're going to go out and you're going to buy yourself $200,000 home, $250,000 max. You're going to put 20% down on it. Guess what you're going to do? You're going to rent until you can save that $30,000. In fact, nowadays you can get an FHA loan if it's your first house, and you only have to put, what, 3 to 5% down, something like that. So those of you out there, if you're getting a Federal Housing Administration loan, FHA loan, you get 3 to 5%. So you can go buy a house with $10,000. So I don't want to hear that you can't save that. You can, and I'm going to show you how, okay? So let's say we set aside $1,250 a month. Now, I understand, guys, there are some people that live in New York City, and there are some people that live in San Francisco, and there are some people that live in Mississippi. Why did I choose those places? Because they're worlds apart. San Fran is ridiculously expensive. New York, Hawaii, ridiculously expensive. Washington, D.C., ridiculously expensive. But there's also Louisiana and Mississippi and Alabama and places like that, Kansas, that are ridiculously cheap, okay? So if you need to have room sharing with somebody, if you're single or if you're a married couple, you have to do that. Why? Because it takes sacrifice, guys. You won't always have to do that. For the first 3 to 5 years, you might. So $1,250 is your budget for housing. That's your budget. If you make $60,000 a year and you pay 15% in tax, you have $51,000 a year to spend. $1,250 your budget. That's it. Whatever that buys you for a house or an apartment is what it buys you. I would prefer that you buy it instead of rent it. But if you want to rent it for a few years, that's fine until you save up your money. So now we have $3,000 left. What are we going to do with this $3,000? Now, guys, you're not going to be eating ramen noodles. I'm trying to put this out for you so that you can live a reasonable life. You shouldn't be eating just pasta all day long or just ramen noodles all day long and only drinking water for your whole life, of which I'm going to take a sip of now. So, let's break it down. $1,250 for rent. The goal is to buy. If you can get an FHA loan, even better. It's less down. It's always nice to have a 20% down payment. Of course, that would be about $40,000 or $50,000, which might take you a while to save up if you're doing 20% down, but you can get away with less than that. Now we have $3,000 left. All right, let's go over this. I'm a realistic human being, okay? It doesn't matter just because I have money and fly in private jets and own Ferraris that I am not realistic and don't understand that a gallon of milk costs $2 to $3, okay? Depending if you go organic, could be more, whatever, okay? Anyway, isn't that funny? It always reminds me of that when the president's running for office. How much is a gallon of milk, sir? I mean, it's like so that they know they're in touch with everybody in the world. But anyway, $3,000 left. Well, let's go down the list of what modern people own these days. You're going to have a cell phone. You're going to have a cell phone. As we saw earlier with Apple, you might not have an Apple phone because they're not selling as well as they used to. But that cell phone is a big area where people need to be cutting back. Most of you out there have $200 cell phone bills. $200 cell phone bills, okay? If you can't afford for your teenage kids to have a cell phone with internet, which is $30 a month each, that's $60, guess what? They have to pay it. There is no shame in making your 15-year-old kid get a part-time job that makes $200 a month. Heck, you can make more than that. There's no shame in that. Don't be embarrassed to force them to do it. Guys, it builds work ethic, it builds character, it builds moxie. It does. If you're one of those helicopter baby parents that you baby your kids, you are not preparing them for the real world. Sorry for the lecture. All right, so your cell phone bill cannot be more than $100 a month. Cannot be. Guys, I make a lot of money, okay? My cell phone bill is $110 a month. $110 a month, family of 5. Verizon. I own an iPhone, okay? Now, there are cheaper plans. I'm not going to get into it. Can't spend more than $100 a month on your cell phone. There's $100, okay? Now, depending on where you live in this country, it could vary greatly, but you might have a water bill, all right? If you live out west and you water your grass and you have a lot of grass, it can be very, very expensive. I've seen bills, if you own a swimming pool, as much as $300-400 a month at times. And some of my properties are even more than that, okay? Your water bill should not be more than another $100 a month. We're up to $200 a month, putting it on the screen so you can kind of see it lined out, okay? Now, cell phone 100, water bill 100, okay? What is next? What is next is electricity. This is the one that's going to ding you a little bit. Now, some of you live in 5,000 square foot homes. Some of you live in 1,000 square foot homes. We're talking about $60,000 a year salaries. So you shouldn't really probably be in a home that's much bigger than 2,500 square feet, to be honest with you. You might be. But if you are, you're probably spending too much on your house. Unless you're in like Alabama or Mississippi, you can get something crazy nice for 200 grand. Okay? That bill shouldn't really be more than 150, 200 bucks a month. Electric, 150, maybe 200 a month. Let's call it 200. So what are we up to? 100 cell phone, 100 water, 200 electricity. We're up to $400 per month. Now, what are we missing in all of this? Cable and internet. Got to have internet, right? That bill for cable and internet can be out of control. You have Netflix, you buy all the channels, you buy the fastest internet, 1 gig, blah, 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 and all of a sudden you have NFL Sunday Ticket and your bill's $300-400 a month because you have every channel plus internet. Unacceptable. Buy Sling TV for all I care. Use internet streaming, use Hulu, use whatever, but that bill cannot be more than $150. Period. I would prefer it to be $100. I would prefer it to be $100. Notice, I'm being fairly realistic here. I'm not making you eat noodles, okay? So $100 cell phone, $100 water bill, $200 electric bill, no more than $150 for your internet and cable bill. We're at $550. Okay, now, some of you will be self-employed, and to be honest with you, healthcare is not cheap, all right? I'm not going to tell you what I pay for healthcare, but it's a ridiculous amount of money, okay? It's salaries for some people, okay? $2,000, $3,000, $4,000 a month for great healthcare if you're self-employed. Many of you won't be self-employed. You'll be working for somebody, and your healthcare will just come out of your taxes and come out of your paycheck, okay? But even if you have to pay healthcare, if you're at 60 grand a year, you should probably get a little bit of a subsidy from the government. You ask for it, et cetera, and so forth. Family of 4, et cetera, and so forth. I'm going to say $400. All right? Let's round it to $450 so that we have an even $1,000. So healthcare, $450. So what do we have in fixed expenses every month? $1,000. I'm being realistic. I'm not making you live in the Stone Age to where you can't own a TV and can't have internet and can't watch movies and can't have air conditioning. All right? Being realistic here. All right? But what you can't have, no nose, no credit card debt, no car payment, okay? None of those things. Can't have them. You don't make enough money. Even at $300 or $400 grand a year, you shouldn't be having really car payments. Buy cash if you make that kind of money. You make 30 grand a month, buy the damn thing in cash. Save up 6 months, buy the car. Over the next 4 years, save a little bit every month, save $1,000 a month, boom. If you're making 30 G's a month, you better be able to do that. All right, we're talking about $60,000 a year household income. Okay, so now we have $1,250 for our mortgage. We have $1,000 for fixed expenses. That puts us at $2,250. We have $4,250 to spend. We got $2 grand a month left over. We got $2,000 a month left. Okay, now this is where you can really be crafty. On the high side, you're not allowed to spend more than $1,500 a month on food and fun. Now, that's where you're going to be feeling a little pain. All right? Now, if you can get away with a health insurance plan that's less than that, maybe you get a couple extra $100 out of it. You cannot be spending more than $1,500 a month. This means you or your spouse is going to have to cook. You're not going to be eating out 5 days a week. In fact, you're going to be eating out like 1 day a month. 1 day a month. I don't care if you stop by and get a cup of coffee once a week somewhere. but you're not eating out. You're not spending $75 at TGI Fridays or $100 at the bar. You're not doing it. And if you're smart, you could easily, hear me out, easily live on $500 a month in groceries. Easily live on $500 a month in groceries. $200 a month in gas for your vehicles. I don't know what kind of vehicles you have, and some of you might drive a ton. You might drive 30,000 miles a year. I'm trying to give you kind of average ranges. People that drive 10 or 15,000 miles a year, that's about 4 tanks of gas. That's 1 tank a month or 1 tank a week. Okay? Hopefully, if you drive a lot, then you need to get a Honda Civic. You need to get a Prius. You need to get an efficient vehicle to where you can get 400 miles a tank. Okay? You're not driving some F-250 pickup truck where it costs you $100 to fill it up and you're getting 14 miles of the gallon on the highway. All right? I'm realistic, guys. I live in the real world. Okay? So, $500 for groceries, $200 for gas. That leaves us $800 left. We're going to throw in $200 for just stuff because guess what? Shit happens in life, right? Something breaks, this or that happens. Now you got $500 left to think about what you want to do with it. All right? Maybe you want to take the family out once a month and it costs you $100. Now you got $400 left. Okay? Maybe it's a bigger expense than you expected and I don't know, the hot water heater needs to be repaired or something like that. But at least you have some cushion. What are we doing with that last $500? We're saving it. We're saving it. We're saving it and we're investing it. We're investing it in the market, in a Vanguard ETF or the spiders or the Qs. All right? Some of them pay dividends, guys. 2% dividend. $500 a month is $6,000 a year. Okay? $6,000 a year. Let's take a look. What does $6,000 a year make us, guys? Let's find out. Okay? Find out. So, take a look at this graphic, guys. All right? This is from Money Chimp. I want to give a shout out to Money Chimp on this graphic. Okay? $1,000 starting principal. I could have started at 0. It doesn't matter. All right? If you save $6,000 a year for 40 years at 8%, 8%, the stock market average is about 9 or 10%. Okay? Now, I know what you're thinking. 40 years. Oh, my gosh. I'm already 45. Well, I'll get to that in a minute. Okay? You start investing at 25 years old. You retire at 65 with $1.7 million. Now, hear me out. This assumes that you never make more than 60 grand a year. Now, I understand the first 3, 4, 5 years of your life, you might only start out making 35, 40 grand a year at your first job. Graduate college, that's all you might have. Okay? And I understand, guys, some of you will have student loan debt. Well, remember we talked about we have $800 in discretionary? Okay? Well, maybe $300 or $400 of that goes to your student loan debt. Okay? But hear me out first. In the beginning, if you have student loan debt, if you have credit card debt, remember that $500 we're investing? You're going to put that into paying off your credit cards. $500 a month, 1 year, you got $6 grand paid. For most of you, that's going to pay off the majority of your credit cards. You'll have your credit cards paid off in 18 months. Okay? The average American is about $9,000 or $10,000 in credit card debt. All right? After that, start saving. All right? I'm not giving you some Dave Ramsey talk here, all right, even though we agree on a lot of things, okay? Over 40 years, you have $1.7 million. If you take that 8%, guys, if you take the 8%, all right, same amount of money, all right, and you bump that up to 10%, you have almost $3 million. Almost $3 million, guys. Almost $3 million. Think about what I'm saying. Now, I want you to take a look at something. Now, if you start later in life, say you start at 45, you want to retire at 65, and you do exactly what I just said and save $500 a month, you're going to have $300,000 in retirement. If you had 40 years, you have $1.7 million. That extra 20 years of savings is worth $1.4 million. What's the lesson here? Start early. If you start late, you have to sacrifice more. Guys, let's take a look at the 20-year, all right, let's take a look at the 20-year plan, 45 to 65, and let's double it from $6,000 a year to $12,000 a year, okay? You still only have $600,000. The person who starts at 25 or 30 has 1.5, 2 million, 3 million. You have 600 grand. All right? You have 600 grand. You need to start this process early. All right. Now, if you're thinking to yourself, you can't retire on $500,000 or $600,000 at 65, you might be right. Your Social Security average check's about what, $1,200, $1,300. And then if you're doing investment income off $500,000 at 4 or 5%, you're looking at another 20, 25 grand a year. Most of that won't be taxed because of your income level. And then Social Security, well, no, it'll be taxed at 10 or 15 for capital gains. So I'm talking about your Social Security income. I mean, you're looking at what, 2,000 plus $1,300, $3,300. Yikes. That's less than you're making now. So you're going to have to supplement that. This is where the swing trading newsletter will help you do that, guys. This is why I'm talking about swing trading and wealth building at the same time. Swing trading and wealth building at the same time, guys. Okay? It's very, very, very important that you understand this. Okay? You have to start early if you want big money. Now, remember, some of you out there are making $160,000, $260,000, $860,000. I'm trying to give you the average American right now. 60 grand a year. You can still retire a millionaire. You just got to start at 25, 30 years old. And look, if you can find a way to save more than $500 a month, save $1,000 a month. Whoo, boy. Well, let's take a look at that. What if you saved $1,000 a month for 40 years? $3.3 million. $3.3 million. Don't tell me you can't be a millionaire. Don't tell me you can't get a side hustle for $500 a month. Don't tell me your spouse can't get a side hustle for $500 a month. You know you can, but here's the problem. Most people want to work their 9 to 5. They're so disgusted with their boss when they come home that they bitch the boss out in the car, right? They're not yelling at anybody but themselves because they're yelling in the car, banging the steering wheel, driving in rush hour traffic, okay? Even on the way home. And they get home, it's like, what's for dinner? Right? All pissed off. And what do after they eat dinner? They scarf their dinner down, they have a beer, and they plop themselves on the sofa and turn on the boob tube. What sports are on, man? Is SportsCenter on? That ain't gonna cut it, man. That ain't gonna cut it. Go to the gym, release. Go get a side hustle. Guys, I didn't say it would be easy. But if you want to work till you're 75, 80, then don't do any of this. If you want to work till you die, then don't do any of this. Guys, there are plenty of stories. In fact, I saw a story of a gentleman, all right? He raised 3 children, him and his wife. His wife never worked. He was in the Air Force, and he said his max money he ever made. Now, granted, this gentleman retired 15 years ago, okay? The most he ever made in his life was $43,000 a year. He retired with $1.8 million. When did he retire? 64. It can be done. It can be done. It can be done. You just have to invest well and be disciplined. So it takes time. It takes discipline. It takes time. It takes discipline. Put that in your head. Okay? Put that in your head. I don't want to hear excuses. All right? You've got to work hard. Now, again, if you're somebody who's making double, you're making $150 a year, $200 a year, oh my God, this is easy. How easy is this? The problem is you got that $700 BMW payment, don't you? Get rid of it. You got to have that 4,000 square foot home that costs 700 grand to impress your coworkers or maybe the kids' parents at school, right? Get rid of it. You don't need it. You don't need it. And guys, also, if you do this right, your mortgage will be paid off in 30 years and you won't have that $1,200 a month payment. So the last 10 years of this savings, guess what? Guess what? You could put another $1,250 in the bank. Boom, for the last 10 years. Tack on another 300 to 500 grand right there. Right? Tack on another 300 to 500 grand right there. Be smart. Don't be stupid. I don't want to hear excuses about it. Don't be jealous of other people that have more. Just go out and make something of your life. You're going to fumble and stumble here and there, but you can do it. It takes discipline. All right? Save up for that vacation. Don't put it on a credit card. Don't get caught up at a car dealership. You should not be buying new cars anyway. Buy that $5,000 or $10,000 car. Drive it into the ground. Get another one. Don't take out payments on that stuff. Be smart with your money. So guys, this is the January 7th edition of the LiveTraders Swing Trading and wealth building newsletter. I'm going to be talking about wealth building as well as swing trading. In this particular episode, I talk a little bit longer about wealth building. Why? Because it's the first episode of the year, right? The first newsletter of the year. All right. And they're not all going to be an hour, hour and a half. Most of them are going to be 30 to 45 minutes. I just want you guys to understand how to set off in 2019 and get your finances right. All right. Rich people, wealthy people can do whatever the F they want. They can go out and take out a loan on a car or a house. They don't. They usually pay cash. They can do what they want because they already have money. You take that money. You buy a rental property, save up for a rental property. You invest in the Spiders or the Qs or a Vanguard index fund or something of that nature. You do those things. And the younger you are, the more in stocks you should be. I'll talk about what percentages you should be at next time. Guys, I could talk for hours about this stuff. Okay? I have everything I'm talking about. Okay? I have a long-term investment account. All right? Healthy 8 figures. All right? I also have swing trading. All right? I'll put it on the screen what I made last year in intraday trades and swing trades. Okay? Hold on, let me get this real quick. There it is, guys. Okay? There it is. Over $500,000, guys. Over $500,000. All right? Somebody called me out there and asked, want to see my bank account. There's my bank account. $700,000. All right? And you could see, what was this, 2 days ago? Where's the date on here? I'll find the date somewhere, okay? Guys, you can have these things too. But it takes patience. It takes discipline. And you have to work hard. You know what you can't do? Be watching the Kardashians on TV. Be watching what some Hollywood fool does. Most of those people lease everything and rent everything and they're broke. It's all image. Quietly build wealth. Don't worry about the Joneses. Don't worry about your neighbor. Guys, some of the richest people on the block are driving old cars and are living in the smallest house on the street. But they got freedom. This is what I'm trying to teach you guys. How to gain freedom. How to get your life back. That is what this is about. So the swing trading newsletter will help you build some of that wealth through swing trading. Okay? You should be making 100, 200% a year, hopefully. All right. Worst case bad year, we're looking at 30 to 50%. Still better than the market. Okay. And then you take your excess income as well and you invest it. Build some real estate. Build some mutual funds. Okay. Build some ETFs. Build some index funds. 20, 30 years. It's going to start slow. The first 5, 10 years, you're like, oh man, I don't have much money. It's okay. It's all right. You'll get there. All right? So, I hope you enjoyed the January 7th edition of the LiveTraders Swing and Wealth Building Newsletter. This is Jared Wesley signing off until next week. El Palo Loco and ATRA are this week's ideas. Hope you enjoyed this little lesson, guys. We talk a little bit about taxes. We talk a little bit about swing trading. We talk a little bit about wealth building, okay? And next week, I'm going to get into sectors, all right? I want to talk a little bit next week about sectors because last year, the energy sector got hammered. The materials sector got hammered, right? The industrial sector got hammered. We're going to talk about that next week. Why? Because I think there's some opportunity in some of those areas, all right? We'll talk about that next week. Jared Wesley, LiveTraders. Have a good one. Talk to you soon.